Good afternoon or good evening, everybody. Johnny Seville from Acorn Wealth Corp. This is your executive summary for stock setups for Thursday, the 14th of July. Pretty non-eventful day in the market. Really not much going on at all in the S&P 500. Most movements were completely flat today. Not a lot to report on the short or long front. Just a couple of big movers. Again, really the main thing with the S&P right now is we're looking for where we go as we head into one last day of the failed open range, I should say, of July. It was so far going bullish with a negative bias, and also breaking positive in with a seemingly negative pattern. Now, I did get an email actually from one of our students, which I thought I'd share with you, talking about looking at the way that the previous trend of the S&P 500. So there we go. Looking at that previous trend line here that we had in the S&P 500 over in this direction. I'll zoom it back. You can see the high, the high, the high, the high that you can see across this previous pattern that we had drawn on a little while back, and did that relate to where we're currently heading? So if you can see, after drawing this on, we can make that a little bolder. Could this possibly be the next resistance zone for the S&P where we could have a turn? And absolutely. So we are rallying into that 2160 area. That is where that previous trend line resistance lies, and obviously, we've had a terrific bull move here since the Brexit reversal, and so far that's been a great stomping ground for a lot of the longs, and they've performed very well. But how long will that continue? So we're heading into the next open range zone. So I'm going to be very cautious of taking really any new positions until after open range has occurred. We also got a lot of volatility potentially with earnings streaming in from a lot of the major banks and JP Morgan and so forth. So we've got volatility possibly ahead in the next 2 days, and currently at the time of recording this, the overseas markets are pretty flat as well. So it's not often that I have very little to say, but tonight I have very little to add. A lot of the shorts we're looking at for the big ones, of course, we're just waiting for a better re-entry. Things like XYL, all still very valid. All still, if we just correct this chart. You can see a lot of these stocks are still rallying right into resistance. A lot of them are turning over. Looking at things like AVGO, which I still hold small handfuls of puts in AVGO and XYL and all these, as I mentioned, in Trading Room. But I mean, we're waiting for these to break down so we can get possibly a better re-entry. Where I'd look to actually add a more normal type position to these. Again, as you remember, these were just small speculative entries where we started to scale in, but a lot of these positions like AVGO, you can see rallying up in an upward channel. They're oscillating up into resistance, and as I mentioned in the class today, AV, another one that's high up on my favorites of possible shorts. You can see that one's just rallying up, holding under resistance. So there's a lot of stocks that we have in our top list for potential shorts where they are still really not looking very bullish at all. They're just holding a bearish pattern and squeezing up into resistance zones. So I'm still very cautious of the market. I'm quite happy to hold on to my favorite puts. In things like AVGO, I hold puts in AVAV. I hold puts in STMP. I hold puts in XYL. Just that these are just small allocations where I'm investing again what my stop loss would normally be. So I'm just intending to hold them till they're either big successes or nothings. Just like I would again a stop loss on a stock trade. So I'm very happy with how we're positioned at the moment, and for the more sizable positions, we have sold those out as they've hit their relevant stop losses, those being shorts. So for those types of trades and larger transactions, we've protected the capital as we normally would, just leaving a stop loss size position in these puts. Okay, so in terms of, but we have had some good movement in a couple of things worth mentioning. STMP, of course, was one of the ones I had talked about in trading room the other day. That was an alert back a few weeks ago about the $70 puts. Now this looks like it may just be about to break down through its trend line, and so you can see that dropped 7.85% today. Of course, over a previous 8.13% drop there on Monday. So really, really good action, and looking for that to continue down towards that $40 target. I hold the $70. What do I hold there? I think they're the. Just double check. Just a moment here. Okay, so on this one, just for full disclosure, yeah, I hold the November $70 puts. Bought those at $6.90. Those $6.70, sorry, up to $8.60 today. Almost a 30% move in just today alone. And so I'm looking at those again, those $70 November puts. And again, looking at this to drop down to the $45 to $40 target. And so this one's really moving great against the market. And my other two favourites, again on the list at the moment, AV definitely is up there. AVGO, obviously ahead of Apple's earnings. We're looking at that, and XYL still seems to be weak, but waiting for those to have a bit more of a breakdown before re-entering more capital into those. MUX, of course, had a great day today, kind of holding its support really, really well, and pushing up on reasonable volume, not as big as the volume yesterday. We do want to be careful of any kind of topping pattern. You can see that it's starting to oscillate back and forth, start to shake a bit. It has done that before, though, of course, and well, of course, here on Friday, June 17th, we had 38 million shares down, then 5 million shares up, and then blasted away. Again, similar, we had 5.31 million shares down on Tuesday, 3.99 million shares up today. So we're just waiting to see if this is going to push further, but obviously still holding its moving averages very well. Another thing I thought worth commenting on, OCUL. I was asked in trading room if I felt that when we adjusted our stop loss up to protect the entry point, and that of course stopped out yesterday, leaving traders who had shared that viewpoint and updated the stop loss to that level, got you out with a 10-cent profit, which is nothing to write home about, but it's 2.5%, and instead of a loss. And someone said, well, do you think the stop loss was too tight? I said, well, if I was to make the same decision again, I would still do it the same way, because our attitude right now is to take lower risk trades where we're really protecting the entry point, really want to preserve capital and protect our profits as well. And I said, so, could it have been too tight? Yes, but if it ends up at $5 tomorrow, I'll be really happy. And of course, where did it end up at? $4.96. So again, it's easy to second guess yourself when things pull back like that. But the plan was to protect our profits and to protect our capital on trades in this uncertain market. And we've got our share of high risk stuff in our back pocket. Now it's time to let our slow and steady win the race kind of swing trades build us up a nice profit war chest. So right now I'm not worrying about missing profit. I'm worrying about protecting capital and protecting profits that we make. Even if that means that we stop out a little too early, it still gets us out with profit instead of potentially a loss. And that's kind of my mantra right now. So again, this is a great to see that was the right decision. And we'll still keep an eye on this because it could turn into a cup and handle. But right now, that's obviously off the charts with a small profit. Let's have a look now. One thing that I would do, GRA is one of our shorts that's approaching its stop loss, but right now the stop loss is on the wrong side of the moving average, so I would actually change that stop loss to 76.43 to give that a little bit more room on GRA, because there's no point having a stop loss inside the zone. We wanted to have it on the other side of resistance, so I would alter that. That's one thing. And also for one new potential trade, Barracuda Networks, off the charts, moving momentum from the money flow. It gapped up, consolidated here, 2.69 million, 1.18 million yesterday in consolidation, then another big push of 1.8 million shares today, only moving 1%, but I would look at a break above $20.07 as another big push, and I would look at we could have a possible spring on that, or when we get my extension here. So as you can see, we could kind of pop up to the 38.2 Fibonacci here at about 22.17. So that would be my first target. I'd be basically looking at 22.13 as a target, and which gives us about 10%. And I'd look at a stop loss at 18.83, which I would quickly move up once the stock starts to rally. I'd move it up just underneath that $20 price, which we again will review in Trading Room tomorrow to protect the entry zone. So there's one new potential long. This could do more. This could get all the way up to its possible trend line. But once again, the approach on this will be protecting this with a stop loss as it moves up. Let's have a look if there's any other relevant levels. We can see we've got substantial gap resistance there. We have heavy resistance here. Again, that's at $22. What was the low here? The low was $21.85. So we're going to come in to kind of hit that zone at the same time that we're going to hit our Fibonacci level. So, excuse me. So I would stick with that, and if we start to see kind of weakness or volume really dissipating as we move up, we may even lower that a little bit. But that would be my favorite trade for today. Just once more, I'm just going to look at that low. So the low was. You can see here. What I'm looking for is any significant volume that came in. It wasn't a massive buy. It was only rallied off 613,000. So I'm not sure if that's necessarily a huge level we have to worry about, as much as the drop we had here, this gap fill. So we'll probably be okay with that target that we talked about there at the 22.13 level. Great money flow coming in, and this is from the flag scan. So there you have it, ladies and gentlemen. We've got a couple of volatile days ahead of us, so we'll look to see you all in Trading Room for a full breakdown. Happy trading. Have a great night.